The key takeaway from Reliance's earnings this time will be the margin expansion or the EBITDA expansion. So despite a flattish revenue growth, the CNBC-TV18 poll throws up a near 8% expansion in the company's EBITDA, driving margins to 18.4% and driving about a near 7.8% increase in the company's profitability. So the key is going to be the EBITDA expansion this time. And what will be the drivers for that? One, the O2C business, led by refining margins, will see a pickup in the company's EBITDA. Secondly, this would be the second consecutive quarter where Reliance Jio, the telecom arm of the business, will do well, aided by the July price hikes. And even the retail is likely to continue to see an uptick in the EBITDA given the festive season sales. That said, the upstream EBITDA could remain under a bit of pressure, and that will offset some of the pickup seen in the O2C, the refining, Jio and the retail business. So let's talk in a little bit more detail about the O2C business. Well, the first half of the year was extremely challenging for the oil to chemicals business. We saw the overall EBITDA decline. But this quarter, we're anticipating a pickup in the company's refining margins. Look at the Singapore GRMs. Singapore GRMs went up to about $5 per barrel in Q3, which compares to a $3.6 per barrel in Q2. So there was a pickup in the refining margins, and that will reflect in Reliance's O2C business. For Reliance Jio too, this will be the second good quarter for the company. So we're working with a revenue growth of close to about 4.8%, margin expansion to about 54%, driving a 10% increase in the company's profitability on a quarter-on-quarter basis. The key reason for this, if you remember, would be the July hike. So whenever there is a tariff hike, and in the case of Reliance, it was about a 15 to 20% tariff hike, it takes 2 to 3 quarters for the full flow through. So even Q2 was a strong quarter for the company. That's the prior quarter, 7% jump in revenues. Their ARPUs went up by nearly 7.5%, and this would be the second quarter as the full pass-through takes place. So we're working with the ARPU expanding to above 200 rupees this time. But what you need to watch very carefully would be the subscribers, because last quarter, the overall subscriber base declined by more than 10 million on a sequential basis. Perhaps as the telecom tariffs became a lot more pricier, some people dropped off. So does the subscriber base come down again? That's something that the street will watch. But remember, the stock has been a bit of an underperformer. So last year, Reliance Industries share price declined for the first time in 9 years, and it underperformed the Nifty in 2024. Brokerages increasingly over the last couple of days have started turning bullish as valuations are now looking attractive. They expect the oil to chemicals business to show an uptake. Even the telecom business is likely to see telecom, stable tariffs. Retail is showing a pickup. So brokerages are increasingly turning bullish on Reliance Industries. But will the numbers match up or beat? Time will tell.
For the third quarter for Reliance's retail business, because of muted consumer sentiment and the company's own pace of growth, there is some moderation and consolidation likely. What we're looking at is sequentially growth in revenue would be led by pickup in festive season and the overall third quarter seasonality, which would improve their revenues. But year on year, there would be moderate growth in the business, largely because of the big acquisitions that the company had done. B2B business itself is in the base. So if you look at the last few quarters, quarter 4, quarter 1 and quarter 2, the revenues have been around that 76,000 crore mark itself. In the third quarter, we're expecting it to be pretty flat year on year itself. The key to track, however, would be the margins, and we're also looking at 7% increase in retail revenue per square foot as per Nuvama's estimates. Now, talking about the margins itself, analysts would be pegging in anywhere between 1 to 2% year-on-year growth in the EBITDA and 8 to 9% growth quarter-on-quarter due to the festive season itself. Put all the estimates together and we have the CNBC-TV18 poll, which throws up a Reliance retail EBITDA for the third quarter at close to around 6,400 odd crore rupees itself. But apart from reported numbers, what we're looking at is some commentary on festive season pickup, growth in their new formats, the likes of Tira, Yusta and Swadesh, and finally their FMCG business as well. Aggressive rollout led by the beverage business Campa are all these factors which would lead the next leg of growth for Reliance Retail.